All right, ladies and gentlemen, after the great success of the last commercial asset we syndicated in the Gold Coast, we're very excited to announce our next commercial asset in Shore Invest being a medical centre we've secured for $30 million in Clayfield in the heart of Brisbane at a net passing yield at 7.5%. This is an institutional grade asset which we're purchasing off a publicly listed real estate group that has purchased the property 5 years ago for $36.5 million. And as mentioned, we've secured this at $30 million, being 20% below that previous purchase price 5 years ago. Bear in mind, commercial assets like this have 3.5% to 4% fixed annual increases applied to all the 8 tenants over the past 5 years. Therefore, that previous purchase price of $36.5 million being 20% higher than we're paying was also at 20% less rent. The compounding accumulative total of those 3.5% to 4% increases annually over 5 years is roughly 20%, and we're purchasing the property at 20% less, representing great value. The property was built in 2017, which we love, as it means the property is in good condition and little maintenance will be required. And hopefully in the QS report, we should also see that there's decent depreciation benefits still left. Most importantly, most of the tenants in this building have purpose-built their space for their business, mainly being Qscan, which is a radiologist business that would have had to put lead lining in the walls, as well as all forms of equipment to support a radiology clinic. Qscan themselves are a nationwide radiologist business with over 40 clinics across the country, and it's also majority owned by a publicly listed $15 billion fund. Medical assets with tenants like this are considered one of the lowest risk profiles because the tenancies are partially government funded and the businesses themselves are somewhat recession proof. There's also a growing demand for radiology businesses like Qscan with the aging population of Australia, and Clayfield itself has an aging demographic. Now, I just want to highlight that we're purchasing, as mentioned, at a 55% LVR, or we're taking a debt facility against the purchase itself at a 55% LVR. And your capital investor does get the benefit of that leverage, meaning if you put in $100,000, you own roughly $200,000 of the property value itself. So the property doesn't need to be sold for double the purchase price in order for you to double your capital invested. So to use more specific numbers, we're purchasing this asset for $30 million. If we sell this asset for $45, $46 million in 5 years' time, you would double your capital invested. Bear in mind, over that 5-year period, you're also getting 7, potentially to 8% in distributions paid quarterly. The asset itself has 3.5% to 4% fixed annual increases on all the leases applied annually. And if we sold this in 5 years' time, that is 20% worth rental increases. And if we sold it at the 6% historical average for medical assets, as opposed to the 7.5% we're purchasing this for, there is roughly about 40 to 50% increases there alone. We're also, as mentioned, waiting to sell this asset once all the leases are renewed in 4.9 years' time. So hopefully there might be a market review that shows additional increases of those leases. So selling this for 50% more is quite achievable, meaning you should hopefully double your capital invested whilst also getting paid that 7 to 8% distribution through that period. This is a $100,000 minimum investment, and you do need to be a sophisticated investor. We'll be raising $15 million to acquire the asset of $30 million. Therefore, you can work backwards to figure out it's roughly a 55% LVR once we incorporate establishment costs. You do not need to demonstrate servicing for this asset, and at a 55% LVR, that is also a very conservative debt position. We're currently in the due diligence period, and we expect to go unconditional on exchanging contracts by the end of October. So investors need to register their interest and complete the onboarding process well before this due date. For any questions, feel free to reach out to me personally. Please inquire, and we'd love to discuss more.
This product is issued by Westbridge Funds Proprietary Limited, AFSL number 533936, in partnership with Shore Invest, Shore Private Proprietary Limited, authorised representative 1209986 of AFSL 531480. The information provided is general in nature and does not constitute investment advice or personal financial product advice. This information does not take into account your investment objectives, particular needs, or financial situation. You should seek independent financial advice. Target returns are not promised nor guaranteed and are based upon a number of assumptions. Their achievement is subject to risks. Please refer to the IM for more information.